Hi, Larry Gaines, PowerCycleTrading.com. This video I want to walk you through one of my favorite trading setups. This is an earnings trade setup, a non-directional trade setup, what we call I call it a double lightning, or we call it a double calendar. But the great thing about this trade is it's got a lot of flexibility. What it does, it takes advantage of selling volatility as you go into an earnings release. So you typically will get what we call volatility crush. So as we go into an earnings announcement or date of earnings release, so for Micron, this was on the 28th right here, you'll have typically the implied volatility spikes to the upside or gets elevated. So you can see here it was down. You just look at the implied volatility measurement here, is that 0.36 or so. Came all the way up to 0.45, and right into earnings it was about 0.42. Now, there's always uncertainty about the earnings. So after an earnings release, then all that uncertainty is gone and volatility collapses or gets what we call volatility crush. So this takes advantage of selling volatility and selling time. And so you've got a lot of flexibility. So we set this trade up. This is an alert trade setup. We set this trade up right before the close on the 28th, and then we had a drop down here yesterday, and it just kind of hung right here. Now, this gave us a profit just based on the volatility collapse of about 38%, or we can have the flexibility to leg out if we want. So if we think it's going to go up, we could have the flexibility to leg out and go long the next week. This would be the 76 call, or if we thought it was going to go down, we could go long, leg out, and go long next week, the 71 put, for a potential bigger move down. So you've got a lot of flexibility, and this is what the trade did going out today with a profit of about 38%. So the cool thing, the great thing is these are very low risk trades going in. So we set this up double calendar. So we were long the 8 October 76 call, short this week the 1 October 76. So that's a calendar. And then we did the put side. We were the long the 71 put for the 8 October, short the 1 October 71 put. Total cost, total risk, $66 debit. Okay. So the only way you could really lose $66 debit is if it gapped down here and never came back, or gapped up. Now today this went out up, without doing anything, because the volatility collapse or crush, this was up $25, $25 on our total capital at risk of 66. So, that's a 38% return, just plain volatility collapse. Or if we wanted, we could log out, or not log out, but we could leg out of the long call, the 76 calendar, and then say long the 71 put calendar and have a bigger potential profit for a downside move. So fantastic trade setup. We've been doing these a lot since last year. These are just high probability winning trades. We're up 87% on the winning trades based basically off of this type of setup. So hopefully you'll join us this Saturday and be doing a free webinar on these types of earnings trade setups. So good luck trading.